Okay, the use of Fibonacci in an ascending broadening formation bounded by a horizontal base. Okay, so the setup is a horizontal line. Basically, what you're looking for is a support point, okay, or support line. Now, purists would say that you need at least 3 touches. If you're waiting for perfect setups, in my opinion, you're not going to find them. So I use this a lot in my analysis of when I'm trying to get involved in a trade. Obviously, if we look at this marketplace, this is sterling dollar, 12-hour chart. We have been in a downward movement. Movement's been going down, and then we hit a support line that's been holding for quite a while. And since this is a 12-hour chart, it's been holding pretty strongly for a little while, all right, for a good amount of, maybe a couple of days, I would think. But so here's the first part of the setup. You're looking for a horizontal line because a lot of technicians will show you the pattern and then, say, well, they did this based off of the pattern, and in hindsight's 2020. So I like to try to show how you should be doing this in a marketplace that's live, and you want to take advantage of what the marketplace has been doing, right? So the first thing that we need to know is that we need a broadening like wedge, kind of a broadening wedge, okay? So if we're looking at these supply points, these 3 right here, okay, that's going to give us the broadening kind of wedge pattern. All right, now supply point, if you don't know what a supply point is, really simple. You take your forefinger, middle finger, and ring finger, put them on the table in front of you. If you're a normal human being, your middle finger is going to stick out the top. That is your supply point. Demand point's the exact opposite. Turn your hand around and point it towards your stomach. Your middle finger sticking out of the bottom is a demand point. So in a supply point, you need a high surrounded by 2 lower highs, also known as a pivot point or a fractal point. I just call them supply points and demand points because that's basically where the market met resistance and it came off. So there was supply there. All right. So first setup is the horizontal line that we find. Okay. Now, I just want to take note, and I discuss this further and deeper in, when I teach people, is that like this for me, this little break right there for me is like what I always consider the first crack in the glass. The glass hasn't shattered yet, but it's the first crack in the glass. It's the first indication that something's up with this market, and it potentially can continue downward. But in a broadening formation, there are 2 key points that you have to be aware of. And this is what this lesson is about. It's about the partial rise and then a pullback before the final move downward and exhaustion. Okay? So we found this horizontal line, which is easy enough, right? I mean, you could do that on any chart. I mean, a child can do that, right? But now we need to do this. We need to say, okay, here is my supply point. I'm going to go up and I'm going to connect to that supply point. Again, a purist would say it's not perfect, Tom, it's, there's no 3, point touches. But I'm telling you, if you're waiting for like perfect, you're never going to get a trade, and probably if you do find one, it's probably going to fail. But anyway, so now we're going to talk about using Fibonacci in this, okay? I used to call this Fibonacci's in the triangle. So what I could do is I could take the high point right here that I have, I could throw my tool down and come up with my Fibonacci retrace, okay? Now, here in the marketplace comes down, touches this. We can consider this point right here our partial rise, okay? Or, you could say this point is your partial rise. All right, now, the market needs to break down. It needs to go lower than that horizontal line to show that, yes, we are going lower. All right. Now, if you're an aggressive trader, you're going to sell the 0.382. That's fine. Where's your stop got to be? Well, it's probably got to be above this level right here. Okay. Which happens to be like 127.28. So your stop would have to be up in this level right there. All right. Now, we said that two things have to occur. You're going to have a partial rise, which is right here against that fib point, and then you're going to get a pullback. And this is where most traders get messed up, okay, is because they get fooled on the pullback. And if you're aware of the pullback, you'll know it's just a natural movement that constantly occurs. So let's move this chart forward, and I'll show you exactly what I mean. Here was the breakdown. Here's the pullback. That's the pullback. Now, ultimately, it would be wonderful it pulled back to that 0.382. It doesn't. It's showing weakness by not even being able to get up to this fib level. So your sale would be up in this level, right up in here. Now, you could have taken this break. Absolutely, could have taken that break. But here's the point. Like right there is only worth, you know what, 100 points or so. This pullback right here gives you an opportunity to, you know, add to the trade. You know, now people would say, well, you don't add to trades that are out of the money. That's not exactly the case. You have to have rules, and you got to know when you got to bend the rules. Now, the idea is if you're a short-term trader and you took the break and you took your profits, that's fine. But as the marketplace is coming back, it's giving you another opportunity to re-short the pattern. It happens a lot, but what happens to a lot of traders is that they get this movement down and then they get the movement back up and they're going, oh my goodness, we're going right back up to this top. No, this is the area to resell, okay? And then the marketplace makes its big movement downward to here, 121. So from 120, say 5 to 121 is 400 points. Now, I want you to take note of something. Look how long the market stood here. This is a 12-hour time frame, right? Look how quickly it dropped. Once the marketplace, you know, once it got set, it was a quick, straight run down. That is a beautiful trade. So I hope that you like this lesson. Please leave some comments for me. I'll be going over other patterns, and you know, this is a fib style type of trading, which I like to do. I'm a big proponent of Fibonacci, and I'll see you in the next lesson. Remember, always enjoy the party, but dance near the door. Cheers.